Johanna Chua indeed is here, and I think I'm an economist. She's the chief economist. She actually studied this stuff. I'm just mouthing off here. Morning, Johanna.
Hi, morning.
Did anything that I just said make any sense at all? No.
I mean, certainly over the years, not just households, but even countries have become more energy efficient over the years, and you've seen that in the decline of both energy and oil intensity over the last decade.
Are you worried that something's not going to be there, or it's going to be priced out of your range? The more careful you are with that resource.
Yeah, but there's still a cost. Obviously, there's obviously growth implication, and so again, as you mentioned, the producers and consumers have different. It's a redistribution of incomes, and so obviously there's going to be winners and losers, and the recent softening of oil prices is a bit of a welcome respite to Asia, especially for the net importers.
Right.
But I think the outlook overall, I still think this is a temporary positioning unwind thing. I still think the risks are still on the upside.
Think the resumption upwards is really a done deal, and this, we've never seen so many central banks on the same wavelength at the same time. I mean, really pulling their noggins out, over whether the economy can absorb at other times we would consider 25 bips a pretty minuscule sort of run-of-the-mill humdrum sort of thing. But nowadays, I mean, they're trying to strike an ultra sensitive balance, and you think that's just going to continue unabated. Inflation is here to stay.
I think core inflation pressures are still building up, and I think it's too early for people to get complacent. So we've had quite a bit of tightening already, and some have actually tightened quite a bit more than others. I mean, take for example China. Some people will say China's probably more than halfway of its sort of tightening cycle, but I do think we can't take the eyes off the ball yet. I think inflation expectation is a very fragile thing. You need to make sure you anchor those expectations well, so you need to stay very vigilant.
Yeah. Oriel, I used that high oil price anecdote a second ago. I love it. I hate to say this. I know it's anathema, but it keeps the riffraff off the road. It kind of clears the way for some nice summer driving. It really does. I want oil to go up. I want it to hit $300 a barrel. It's going to be a mark of wealth and affluence.
Well, it may well do. Although, as you said yesterday, Bernie, you made a good point. I think it's going to take more than oil prices at even $150 a barrel to get the Americans off the road. Joanna, let me ask you about this. You're talking about oil prices continuing to rise. We had 4 warnings overnight, if not more, on the oil price. We've had OPEC, we've had the IEA, we've had the IMF rather, talking about the fact that the high oil price is one of the greatest risks to the economic recovery. And then, of course, the report coming out from Goldman Sachs, which was reiterated once again overnight, essentially saying that speculators have pushed ahead of fundamentals. They've suggested to their clients that they do lock in profits at levels like these. With recommendations like this from respected brokers as well as from government organisations and industry bodies, what makes you what makes your view so strong that we are going to see higher oil prices?
No, actually, to be fair, actually, this year's our forecast for, say, Brent crude, our house forecast is about $105 a barrel on average for the full year. But I'm just saying, a lot of these, commodity prices are very volatile, so it's hard to say whether the rally is over. If I look at some of the economic data out of Asia, I mean, it's still relatively resilient. And there's still a lot of liquidity out there, so that's why I'm just saying we can't be too complacent.
Okay, well, let's talk about how you can make some money out of this situation. How do you hedge against these higher oil prices? Is it buying into some of these economies that are net exporters rather than importers?
Well, I mean, clearly one of the strategies is, central banks are going to try to mitigate some of these inflationary pressures by letting the currency appreciate. So I think certain currencies will do a little bit better. I mean, for example, one of the key events this week that's very eagerly awaited is the MAS meeting. And we're expecting, MAS is going to resender the Sing dollar near band by maybe 2 to 3% on Thursday. I mean, and that's going to help a spillover impact on the ringgit. Malaysia is one of the countries, obviously is a net beneficiary in the region, given that it's a significant oil and gas exporter. But frankly, I mean, the ringgit hasn't really, performed very well. And I think part of it is because Bank Negara does manage the ringgit very closely with the Sing dollar. So I think the key thing we're watching for is if the MAS does move with the Sing dollar on Thursday, that will be a catalyst for dollar ringgit to potentially fall below 3 handles.
Is this a revelation? I mean, is the market price this in, or should we jump in for a 3% pop?
No, I think the market's already. Well, I think the market's priced it in, but I mean, the consensus, is in favor for recentering. But there's still a few people that are not calling for recentering.
Interesting tool that they can do that is basically, I mean, they can shift the what do you call it, the
It's the near band, right? They have a Sing dollar band,
Right.
near band.
Right. So they can reband it, basically.
They can reband it. The problem is they don't disclose the band, so you have to kind of model it.
But that's what you want to do. You want to keep them guessing. I mean, you don't want to, in the interest of full disclosure and transparency, it's a great thing in concept, but in reality, if you have it, it's terrible because it just draws lines in the sand. This is particular to the MAS, though, right? In the way they
they're the only ones that don't have an explicit interest rate policy.
Okay, HKMA.
Oh, okay, I forgot. Well, Hong Kong has a peg, so they also don't have an interest rate policy.
You can't reband anyway, but it's been going on the stronger end anyway. That's at 77 something.
Yeah, but that's a bit. I mean, the problem in Hong Kong, you have no means to adjust, right? So therefore, you have asset reflation, etc. At least MAS has a bit of an adjustment.
Is the MAS model something that other countries might think about adopting in the future? Can they do? I mean, can they do it? It kind of works. It's kind of neat, isn't it, to do things sort of behind closed doors rather than play it out.
Well,
in the media.
I do think there's something to be said about just versus managing your currency via the dollar, which can be very distortionary, then versus giving yourself a bit of degree of freedom by managing it versus a basket.
Right.
Certainly it works for Singapore, but the jury is still out. I mean, inflation has picked up quite a bit, but we think it's actually been quite effective.
Interesting. Okay, so Friday, right? MAS?
Thursday.
Thursday.
Yes.
Big meet at the Monetary Authority of Singapore.